Look stocks. Today's subject is Kratos Defense and Security. George Tsilis is here to help explain why this one's on his radar. This is an interesting stock, George. Defense contractor, security systems. I think we've talked this before, but why is it sticking out today?
Well, I think, I think we've talked about it at least one time in the last year, but Kratos is actually a defense and security solutions company, but I think their underlying business and their technologies have been in tremendous demand, for lack of a better word, over the past 6 to 8 months because of the Trump administration's goals to do things like border patrol and things like national security and communication systems for defense. This Golden Dome concept that the Trump administration has put forth, and the big beautiful bill that was passed recently includes a tremendous amount of defense spending for communication systems and unmanned drone technologies, which include things like border patrol and national security, tactical and surveillance drones, and defense technologies for missile systems. So, Kratos is basically a business that's in everything that's in high demand in the defense space, and it's done exceptionally well. I mean, it's been a tremendous growth stock. It's not an AI stock per se. It's up like 250% over the last year. Year to date, it's nearly doubled, 175%. And they just keep moving along in terms of price action because they've got secured contracts worth up to $13 billion in the pipeline. And that's important because if you look at the total market capitalization of their business, right now it's around 11.6 billion. Sales just in the last year were only 1.2 billion. So I'm giving you some context. They got a $13 billion pipeline. That's more than 10 times your trailing sales. That's going to push your stock higher. The other thing is if you look at the composition of those backlog sales, 8.8 billion are for unarmed or unmanned drones. And again, their technologies, their government solutions, their communications and missile defense systems are one thing, but I think the unmanned drone space is in high demand going forward, because if you look across the defense space, it's not all the same, because Lockheed Martin, for instance, which we know makes fighter jets, that stock actually has not performed well. Northrop Grumman also hasn't performed all that well. And even RTX, which makes, or Raytheon Corp, which makes essentially the Tomahawk cruise missiles, as well as defense satellites and communication systems, hasn't performed nearly as much as Kratos. And I think it has to do with the fact that the unmanned drone technology space is in high demand, both for domestic security, but also for international tactical offensive weapons.
I love that point, particularly the domestic side of things too, George, is, hopefully we're starting to see the geopolitical temperature come down in the world. Maybe it's too early to say that, but if that's the case, maybe some of those more traditional defense firms, once some of those, stockpiles are built back up, don't have those as catalysts. But a company like Kratos maybe has domestic uses and can still see growth in demand in their products, even if the temperature is a little bit cooler. I see BTIG maybe agrees with some of the optimistic things you're talking about. I saw they upgraded it to buy.
They did, and so they moved it from neutral to buy. They've got an $80 price target, which essentially is on the high end of the street. Right now, the mid target is around 70, low 60. It's just because they have more visibility on their top line sales contracts going forward. The Trump bill that was passed basically allocates tremendous amounts of funds for this business, for their unmanned technologies primarily. And I think if you look at the EBITDA estimates for the next 4 quarters right now, one would say maybe it's still conservative, around 19%, 14% sales growth. These numbers are more than double the trailing historical averages, but also the 5-year averages. But I think the other thing you got to keep in mind is that this stock is, I'm going to call it more of the mid-cap space. It's not a very large company. It's not a small one. But you have to be mindful, too, that right now it is trading at lofty valuations based upon current 2025 and 2026 earnings. Going into next year, right now, the estimates are 75 cents. So that might increase over time, but that places the stock at around 92 times next year's earnings. So it's had a tremendous run, but we could certainly see some consolidated pullbacks in the entire space, and maybe some rotation into the more traditional heavy-duty players in the defense space like Northrop or Grumman or Lockheed Martin or even Boeing.
Yeah, it's interesting because we know those relationships run deep, and at times it can be hard to unseat some of those almost incumbent-like companies on some of these contracts. Right. So for Kratos to really be making a name for itself is important for the future too. So exciting. We'll see where this technology goes and the performance goes as well. George Tsilis, appreciate it.